Well, dear students, good morning to you all. Today our topic is bank accounts. It is the most important topic in corporate accounts, which is useful to BCom and for CI, PCC, CS, CMA, etc. Banking means accepting for the purpose of lending or investment of money or deposits from the public, repayable on demand or otherwise, withdrawable by check, order or otherwise. It is the definition according to the Banking Regulation Act 1949. According to this definition, we can understand the primary functions of a bank is collecting deposits, and then giving loans and investing in the outside. Lending is the second major function of a bank or investment. Now, we have to pay. We means bank. We are in the bank accounts topic. That's why we have to feel that we are in bank. We have to pay interest on deposits and we have to collect interest on loans and advances and investments. Understand? On these deposits, we have to pay interest. On these loans and advances, we have to receive interest. Now, every bank has to prepare final accounts, including two parts. One is profit and loss account and second is balance sheet. These final accounts are prepared in schedules wise. Totally there are 16 schedules. Schedule number 1, share capital. Number 2, reserves and surplus. Number 3, deposits. 4, borrowings. 5, other liabilities. 6, provisions. Schedule 1, share capital. Number 2, reserve and surplus. Number 3, deposits. Number 4, borrowings. 5, other liabilities and provisions. 6, cash and cash with RBI. 7, balances with other banks. 8, money at call. 8, investments. 9, loans and advances. 10, fixed assets. 11, other assets. 12, contingent liabilities. Schedule 13, interest earned. 14, other income. 15 interest expended. Sixteen operating expenses. Well, dear students, totally 16 schedules are there. Schedule 1 share capital, 2 reserves and surplus, 3 deposits, 4 borrowings, 5 other liabilities, 6 cash with RBI, 7 balances with other banks and money at call, 8 investments, 9 loans advances, 10 fixed assets, 11 other assets, 12 contingent liabilities, 13 interest earned, 14 other income, 15 interest expended, and 16 operating expenses. 16 operating expenses, 15 interest expended, 14 other income, 13 interest earned, 12 contingent liabilities, 11 other assets, 10 fixed assets, 9 loans advances, 8 investments, 7 balances with the other banks and cash and money at call, 6 cash with RBI, 5 other liability and provision, 4 borrowings, 3 deposits, 2 reserves and surplus, and number 1 share capital. In such a way, you have to remember all the schedules, then only you can prepare profit and loss account or balance sheet. Clear? Now, this 1 to 5, these are all liabilities. 6 to 11, these are all assets. 12 contingent liability is the neither asset nor the liability. That means not a asset, not a liability. Atu contingent liability. 13 and 14, these two are incomes. 15 and 16, these two are expenses. Now, I am explaining these 4 schedules because first we have to prepare profit and loss account. Interest earned. I already told you, we have to receive interest on loans and advances or investments. So here, what we received interest? Interest on loans, interest on cash credits, interest on overdraft, interest on RBI balance, and interest on investments. And discount. Discount we have to receive or we are receiving on bills purchased. Bank is purchasing bills from public on which we received discount. Schedule 14, other income. Other than interest, whatever the incomes earned by bank, they are all coming under the head of other income, like commission, brokerage, exchange, locus rent, miscellaneous income, transfer fee, profit on sale of assets, minus loss on sale of assets. Other than interest, whatever income is there, they are all coming under the head of other income. Understanding or not? Interest earned. We are receiving interest on loans, advances, overdrafts, investments, etc. Here we are receiving other incomes like commission, brokerage, exchange, etc. Now, interest expended. We have to pay interest on deposits. Interest on current deposits, interest on savings deposits, interest on fixed deposits, and interest on borrowings. Last, Schedule 16, operating expenses. All expenses are taken under the head of operating expenses: rent, tax, insurance, lighting, salaries, depreciation, bad debts. All expenses, whatever the expenses we paid, they are all coming under the head of operating expenses. These four schedules are required to prepare profit and loss account. First one is interest earned. We are receiving interest on loans and advances, cash credits, overdrafts, bills, and interest on investments, RBI balances, and discount on bills discounted. Now, other incomes, other than interest, whatever we earned, they are all coming under the head of other incomes. Interest we are paying on deposits, interest on savings deposits, current deposits, fixed deposits, and interest on borrowings. Borrowing means we also taken loans and advances from other banks, Asian Bank, World Bank, or from Reserve Bank. We have to pay interest on these borrowings. Now, all expenses, whatever the expenses, printing, stationery, post, telephone, salaries, interest, insurance, all expenses are taken under the head of operating expenses. From these totals, we have totals right now. Schedule 13 total 5,000, 14 total 2,000, 15 total 3,000, and then 2,500. After getting these totals, we can prepare profit and loss account. Profit and loss account for the year ended 31st March 2020 of so-and-so bank. Roman number 1, income. Under this head we have to take interest and Schedule 13. The total is equal to 5,000. Other incomes. Schedule 14. The total is equal to 2,000. Now total of totals, that is equal to 7,000. This 5,000 and 2,000 we have taken under the head of income. Number 2, expenses. Here 2 items again. Interest expended. Schedule 15. Total 2,000. 3,000. Operating expenses. Schedule 16. 2,500. Here we have to take provisions and contingencies, like provision for tax, provision for bad debts, provision for dividends. All the provisions are taken here only. Now total of totals is equal to 6,000. Here total income how much? 7,000. Total expenditure how much? 6,000. Now 7,000 minus 6,000, that is equal to net profit. That is equal to 1,000. If the balance from last year is given to you, balance brought forward from last year, if it is given, we can add. Last and final, appropriations. %25 of net profit is transferred to statutory reserve. From this current year net profit only you have to transfer. 1000 into 25%, 250. Why we have to transfer? According to section 17 of Banking Regulating Act, every bank has to transfer 25% of the net profit to the reserve until it is equal to paid up share capital. It is a legal obligation, statutory obligation, hence it is called statutory reserve. Clear? We have to transfer 25% of the current year net profit. Suppose dividends paid 350 rupees. Finally, how much the balance available? Out of total 1,800, 600 gone, still we have 1,200, which is called final surplus, and it is only carried forward to balance sheet. It is carried forward to balance sheet. Were the students understanding or not? Once again, last and final I am revising. In the bank accounts we have to learn, we have to prepare schedules. There are 1 to 16 schedules are there. Out of them, 13, 14 and 15, 16 they are related to profit and loss account. So first prepare individual schedules. Here interest earned, here other incomes, here interest expended, here operating expenses are all other expenses. Now after getting the individual totals of schedules, we are preparing profit and loss account for the year ended so-and-so of so-and-so bank. Now, income Roman number 1, here 13 and 14 totals. Roman number 2 expenditure, under this 2 totals 15 and 16 totals. Then we got the net profit, total of income minus total of expenditure, that is equal net profit. If there is any balance from last year, we can carry forward, we can add here. Then you got the final net profit total 1,800. Then we have to transfer 25% of the current year net profit to reserve, which is called statutory reserve. And if there is any payment of dividends, we have to take here only. What are the balance, what are the final balance available? It is called surplus and it is carried forward to balance sheet. Understanding or not? Thank you all. Well, dear students, we already completed profit and loss account. Now I am going through balance sheet. Now, schedule 1, share capital. Suppose 5,000. Reserves and surplus. In this heading, 2 items are there. First, statutory reserve, already existing balance. For example, already 800 is there. Surplus. We got this surplus from profit and loss account 1,200. Now total 2,000. Share capital total 5,000. Third head, deposits. Savings deposits, current deposits, fixed deposits. We have to take all the deposits. Borrowings. Other liabilities. provisions. Here, creditors, rebate on bills discounted, bills payable, unclaimed dividend, tax provision. These items are taken here. Suppose the total is 1,500. Schedule 6, cash with RBI. Seven, balance with other banks, money at call. Eight, investments. Nine, loans advances. Here cash credits, overdrafts, loans, bills purchased. Ten, fixed assets. Well, 9 loans advances, 10 fixed assets. Here, premises, furniture, etc. 11 other assets. Stock of stationery, interest accrued, prepaid expenses, they are all coming under the head of other assets. Once again, Schedule 1 share capital, only one item is there. Reserves and surplus, 2 amounts are there. 3 deposits, savings deposits, current deposits, fixed deposits, 3 items are there. Borrowings generally one item. Other liabilities, creditors, rebate on bills discounted, unclaimed dividend, bills payable, dividend, tax provision, etc. 6, cash with RBI. 7, cash with other banks, money at call. 8, investments. 9, loans advances. 10, fixed assets. And 11, other assets. Now, last item, schedule number 12, that is contingent liabilities. Here, bills purchased, bills accepted, bills endorsed on behalf of customers. And any other items like which are not neither the liability nor the assets. Bills accepted, endorsed on behalf of customers. This total not at all taken either in assets total or in liabilities total. Now we have the totals of all the individual schedules. Now we can prepare balance sheet. Balance sheet as on 31st March 2020 of so and so bank. Side heading liabilities, share capital, schedule number 1, that amount total is equal to 5,000. Reserves and surplus, schedule 2, total is 2,000. 3 deposits, total 4,000. 4 borrowings, total is 1,000. Other liabilities and provisions, schedule number 5, 1,500. 7, 11, 12, 13,500 is the grand total of liabilities. Over, liabilities are over. Now assets. Cash and cash with RBI, schedule number 6, that is equal to 2,500. Balances with other banks, money at call, schedule number 7, that is equal to 1,500. Investments, schedule number 8, that is equal to 2,000. Cash credits, that is equal to loans and advances. Schedule number 9, 3,000. Fixed assets, schedule number 10, that is equal to again 3,000. Other assets, schedule number 11, the total is equal to 1,500. Now again grand total, that is equal to 13,500. Last item, schedule 12, contingent liability. Total 2,000. It is taken separately, not taken either in the head of assets or in the head of liabilities. Understand or not? Well, dear students, once again, bank accounts we have to prepare in schedules wise. First, we have to prepare profit and loss account. They required 4 schedules, 13, 14, 15, 16. And here balance sheet. Here schedule 1 to 5 liabilities, so 6 to 11 assets, so 12 is the contingent liability. Okay. Thank you all. We'll meet you in the next class.